Thank you for attending our Home Expo. This is the first time that we're doing this collaboration with SPH, and we are very thankful that we have this opportunity to share more with you. So today, I'll be sharing more about what is the market outlook for Singapore for the second half of this year. For some of you who may not be familiar with Orange Tea Research, we publish regular reports. You can find them on our website. We cover the full spectrum of the residential market. Like, for example, if you want to know more about property buying, let's say, for example, the trends for private properties, HDB, rental, including landed properties, you can read out more from our website. We also cover industrial and commercial sector as well. And we cover the other thing is that we do talk about, right now we are actually preparing for the 2025 new launches that will be coming up. We also do a lot of maybe some of these articles like published in Straits Times, in Business Times, as well as we dabble with some of these things, which is the analytics that is quite new in the market. So you can look at all these things in our website. And for many of our analyses, they have been covered in most of our local news media platforms. We have very good support from SPH, where many of our research has been published in Straits Times, Business Times, Sao Pao, even in the Malay news as well. And we are also covered by international news like Bloomberg, Reuters, South China Morning Post, BBC, CNBC, and to name a few. Okay. So to begin with, I always like to talk about the global economic outlook, because Singapore, being such an open economy, if we claim to be open, of course we'll be affected by what's happening around the world. So one good way to look at what is going to happen to Singapore is to look at what's going to happen to the global economy in the next year. So this is one chart that I always like to use, which is from IMF. So for IMF, what they do is that they will collate all the economic growth projections around the world, and they will put it together. And this is the latest projections that they have given for July. And if you look at right now, they have revised their projections for 2024, and they have even given the projections for 2025. So recently, we were very fortunate. In fact, we are one of the, I think we are the only agency or consultancy in the market that we have been consulted by IMF. Their representatives came to Singapore and they wanted us to tell them what is our market projections for Singapore. So during the conversation, we actually asked them, do you think that there will be a global financial crisis? Do you think that things will be slowing down? But the good thing is that they feel that the global economy, in fact, is going to improve. And many countries around the world seems to be performing much better than expected. Therefore, if you look at their projections for 2025, from 2024, which is this year, you will see that there is actually a gradual increase in terms of economic growth. And this is the same for for both the global economy as well as advanced economies. Maybe for some of the emerging economies, the projection has come down a bit slightly, and also maybe it could be the same. Okay, so if you look at different countries, there are only certain countries that they feel that perhaps the economic growth for 2025 could be slightly slower. Like, for example, US, maybe like, for example, some of these emerging developing nations. But the other areas, like for example in Europe, and if you look at the other areas like Africa and some parts of Middle East and Central Asia, it's actually improving. So this means that actually in general, they are quite sanguine, or they are quite positive about the global economy. And if you look at the different countries, like for example just now, as I mentioned, only certain countries, they are expecting maybe a slower growth. Like for example in US, perhaps, like for example, in China, because of their property situation, and India. But even then, most of the countries, if you see here, they are still expecting positive growth for next year. So if that's the case, one of the key things to look out for, especially this month, Fed will be announcing the interest rate changes, because everybody is expecting that the interest rate will be dropping. So how much are we expecting interest rate to drop? Recently, we have some conversation with different bank heads, and from the conversation, I think most of them are expecting perhaps the interest rate will not drop by too much, but at least there will be some adjustments all the way to next year. So for our house view, we feel that perhaps right now, if you see here, this is the interest rate for SORA. Because for Singapore, we use the 3-month compounded SORA. You see that we have already reached the peak and it's going to come down. And we estimate that perhaps the 3-month compounded SORA may reach 3 to 3.2% for the middle of 2025. So what does this mean? All right. Normally, if you look at the floating rate, there will be maybe you add another 0.4 or 0.6 spread to this SORA rate. So let's say, for example, if we are expecting 3.2, that means your floating rate could be about maybe 1.7 or so for next year for floating rate. So just now, what I did was that I went in to check according to MAS, what is the latest SORA rate? And I noticed that there is already a drop. In January, it was about 3.7%, but now, that means this month is already at around 3.5%. So you can see that even for Singapore, they are already slowly adjusting the SORA rate. But where are we now? Let's say, for example, just now, if you're talking about, let's say, 3.6 or 3.7%, if you can see here, Singapore, you can see that even at this interest rate, we are still one of the lowest in Asia and also around the world. So let me give you an example of how the interest rate drop will affect the mortgages. Let's say, for example, right now, we are at maybe 4.4%, okay? So at 4.5%, if you are buying a property, let's say, for example, a new home at $2.5 million, and let's assume that you are taking a maximum, let's say, for example, 75% LTV loan rate. And with that, maybe a 25-year loan, your monthly installment will be about $10,000. But let's say, for example, as I mentioned, if SORA is going to drop to, let's say, for example, about 3%, and with the spread, that means you are taking a floating rate, so that means that your interest rate, that means the interest that you're going to pay per month, may drop from 10,300 to about 9,500. So that means that every month you'll be paying about $800 less. Okay? So this is just to give you an illustration of what we are expecting the loan, that means how the drop in terms of interest rate will affect your mortgage payments. So with this, it means that many people may find that it will be easier or cheaper if, let's say, for example, they refinance or they maybe buy a new home next year. And of course, if you talk about the global economy, what is something that is also very important will be the US election, right? Right now, I don't know whether you're following this debate between Hillary and Trump. It looks like, the women is like taking the lead. But even then, I think right now, they are saying that perhaps, if let's say, for example, if Trump were to win, then there will be more economic risk. Why? Because, for example, if you look at the countries that will be affected, Mexico will definitely be the first country to be affected. And second, maybe China, because of the US-China trade war that will likely intensify. And they also see that these are the different countries that may be exposed to risk if, let's say, for example, Trump comes into power. And surprisingly, if you look at this chart here, Singapore is actually down here as well. We may be affected. So I went on to read, why is it that Singapore will be affected? And I think one of the reasons is because of immigration. Perhaps many Singaporeans, they do travel to US, maybe to study, to work, and they are actually looking at tightening the immigration rates if they were to come into power. Okay? So these are some things that perhaps it may have some impact in terms of the global economy. And what about Singapore? All right? If you look at the Singapore GDP growth, you'll see that Singapore GDP growth is actually strengthening, and in fact, it's quite resilient. Since the beginning of the year, if you look at this chart here, they predicted that our GDP growth will be between 1 to 3%. And the good news is that for the first quarter and the second quarter of this year, it has already reached 3% or 2.9%. That means we are quite on track to be on the upper end of 3%. So if you look at this chart here, it shows that perhaps Singapore's GDP will be quite stable this year. In fact, I think they are projecting 2.5%. Okay? And if you look at this GDP growth, I think most of the other sectors, they are all growing in the second quarter of this year. Like, for example, the financial sector, IT, transportation, and that constitutes your overall GDP growth. Okay? So why is it that we want to look at GDP growth? Because in Singapore, our property market is quite unique. Because of our high ownership rate, many of people in Singapore, if you want to see whether will property prices be dropping or rising, or will people continue to buy, one thing that is very important is to look at our GDP growth, okay? Because when people have jobs, they will continue to buy. They will also be more likely to hold on to their properties. So let's say, for example, what we do is that we look at GDP growth and we look at the sales volume. And if you look at this thing, this chart here, the bar chart here shows your GDP growth for Singapore. And this line here in pink, it shows you the sales volume. So we want to see, is there a correlation? And if you look at here, generally when there's positive GDP growth, normally the sales volume will also increase. And for example, during crisis, when GDP drops, that's when your property buying will also drop. So what do we project for the upcoming months and even next year? So as I mentioned just now, according to IMF, most of the countries around the world, they are expecting a positive GDP growth, and even for Singapore as well. So what happens when we are projecting a positive or resilient GDP? You can see that right now we are down here. And usually when there's positive GDP growth, that's what we mentioned, we are expecting private home sales to hold steady or continue to increase into next year. And what about property prices? For property prices, it's more resilient. Like for example, the only time when property prices dropped was when there was a major crisis. Like for example, down here, 1998 Asian financial crisis, when 911, there was also a drop. And the other instance is during the global financial crisis in 2008. The only time when we have a crisis and prices didn't fall was during the COVID-19. And that is because Singapore, they have pumped in a lot of money and around the world as well. So because of that, you didn't see property prices in Singapore falling. But if you look at, in general, normally when there's positive GDP growth, the prices will either rise or they will hold steady. So right now, as I mentioned, if we are expecting a positive GDP growth for 2025, then it's likely that prices for private properties will either hold firm or it may just continue to rise up, maybe gradually. Okay? And the other indicator to see why is it that so many people in Singapore are buying properties. And can you make a guess what's the most expensive HDB resale price right now? You all know? 1.3? 1.7, correct. $1.73 million for a HDB flat. Okay? So this is something that is really very surprising, especially when I talk to international journalists. To them, paying $1 million for a property is already mind-blowing. And you want to buy a 99-year HDB public housing flat for $1.7 million. So one of the reasons could be because of our increasing GDP per capita. So it shows that Singaporeans in general, that means everybody in terms of the wealth is actually increasing. And we are actually top on the rank when we go, that means if let's say for example we compare with the other Asian countries. Okay, so with this is a preface of what we expect of the economy. And with that, what are some of the key trends that I feel will be emerging or have already emerged and something to watch out for? So I'll go on to the 5 points. So firstly, do you think that prices will continue to rise? You know, when do you think HDB will hit $2 million? Okay, so I think based on our projections, I think that the era of bullish price growth may be over, okay? But definitely, we are entering into a state of stability. So does it mean that this will be a good time for you to enter the market? So if you look at this chart here, this is data from URA, where in 2022, private property prices went up by 8.86%. 2023, they put in a lot of cooling measures, came down slightly, 6.8%. First half of this year, 2.3%. And we are expecting this year to be about 4.5 to 5.5%. So generally, if you look at this trend here, you can see that in terms of price growth, it's actually coming down gradually. So perhaps this And just now, as I mentioned, if you look at GDP, if it's positive, that means prices may continue to hold firm or may just go up slightly. And what are some other indicators to look at? One way is to look at what are the property prices right now for new private homes. If you look at new private homes, the most popular projects in the first 7 months of this year, you can see that is Lentor Mansion, Hill Haven, Cassia, and so on. And you can see that most of them, in terms of the median price, they are at 2,002 per square foot, 2,000, 2,000, 2,000, 2,001. So if most of the new projects, best-selling projects, are selling at this price range, it means that this is the likely price threshold that you will see for some of these new projects that are in the market. And we compiled, again, this is URA data, not our data, okay? If you look at the data, where are the price points right now for some of these best-selling new condominiums? For OCR, that means these are your suburban area. Like, for example, they may cover like Lentor, maybe Toa Payoh, some of these areas. So in terms of the median price range, it's about 2,000 to 2,002 per square foot. And for city fringe area, right now, prices are at 2004 to about 2008. And for luxury homes, we are looking at about 2007 to 3004. So based on this price movement, we can roughly guess what will be the prices that means that we can expect of some of the new launches next year. So this is our prediction that in future, suburban new properties will likely be all above 2,000. New homes in the city fringe will definitely be above 2004. So you're looking at some of the new launches, maybe in Marine Parade, Katong, maybe Toa Payoh. I think Toa Payoh is still considered city fringe. And the other one is new homes in prime areas. We are looking at above 3,002. So with this, these are some of the upcoming launches that we are expecting the sales price. This bar here shows you the land price, and we will add in, for example, maybe the cost, maybe construction costs, maybe other marketing costs. And we are looking at the upcoming launches that will be coming up. Let's say, for example, maybe in 1 to 2 months' time, Norwood Grand is in Woodlands, where the targeted price is about $2,000 per square foot and above. And let's say, for example, like Lentor Central, also about 2001. And Chuan Park, one of the very high-profile projects that will be coming up as well, they are looking at maybe launching at about 2004 per square foot. Okay? And for some of the other upcoming projects, like Admiral of Katong, at Katong area, again, another high-profile project coming up at about 2003 per square foot, and Nava Grove as well, and looking at 2004. And recently, I was speaking to a developer for the site. This is the old police station, I think, at Toa Payoh. They are going to redevelop into a condominium, likely to be launched next year. They are also looking at about 2005 per square foot. Okay? So these are the expected selling prices for the upcoming new launches. So with this, how do we expect prices to move for new private condominiums? Again, right now, 2022, we are looking at 12.5%. 2023, come down slightly, 9.6%. For first half of this year, it dropped slightly, not because developers have dropped price, but mainly because last year, they launched more luxury projects, but this year there are more projects in the mass market region. That's why there was, in terms of median prices, it dropped slightly. But for this whole year, we are projecting 1 to 3%. So if you ask me, do you think that prices in Singapore is likely to fall? Do you think that I should wait longer? So just now, I've already shown you, number one, you look at GDP. Number two, look at the GDP around the world. Do you think that a financial crisis is going to come? Because prices will only fall when there's a major financial crisis. But if you look at the numbers, it doesn't seem to be that way. Number three, if you look at in terms of GDP per capita, generally when people, they have they are gainfully employed, they have wealth, people are still seeing their wealth growing. So it's also not likely that people will drop prices. Of course, a lot of people will ask me, do you think that, I should wait further? Apart from looking at GDP, I think a very practical question will be ask yourself, if right now you're going to sell your property right now, will you drop price? Okay? If you're not going to drop price, what makes you think that other people will drop price? When everybody are all gainfully employed, and we know that the economy will continue to hold stable next year. So perhaps this is one consideration if you're thinking about whether to buy a property. The other major trend to take note of is that there are right now more private resale deals in the market. Okay? So if you look at this, these are the number of resale transactions. So that means these are not new developments by developers. These are actually already sold, so they are reselling their projects. We have also seen that right now, here, second quarter of 2024, we do see that there is a spike. Okay, these are quarterly sales volume. There is a spike down here in terms of number of transactions. And if you talk about the proportion of total transactions, it has actually reached a record high. That means right now, the total number of condominiums that are being transacted, out of 10 properties, 8 are actually resale transactions. Okay, why? Number one, I think one of the key reasons is because resale prices have been rising. So I don't know whether you all have received a lot of flyers. Some of you who stay in condominiums, you do see many people, right, saying that, hey, now perhaps it's time to exit the market. Prices have been going up. So definitely, increasing prices is one of the major factors. The other one is also because for the first half of this year, there were not many new launches. Therefore, in fact, yesterday I was just looking at the numbers. Out of, let's say, for example, 12 project launches in the first half of this year, only 2 were more than 300 units. So all the launches are very, very small, and there are actually very few launches because during a good time, half a year, we can have 20 over launches. So there were hardly any launches, and that's the reason why many people were buying resale condominiums. And with that, many people were also able to perhaps upgrade, or some actually downgraded to HDB resale flats. So in terms of price projections, we are also looking at, you can see that there's actually a drop from 2023 all the way, but we are looking at perhaps condominium prices may continue to hold steady for this year. And another point to note, this is a very interesting segment, okay, the HDB market, because we know that 80% of Singaporeans, they stay in HDB flats. So HDB market, in fact, is actually outdoing private market. If you follow the news, you'll know that, I think it was last month, that the government has just imposed a mini cooling measures where they reduce the LTV for people who are taking HDB loan. So that means they are actually trying to curb these people from buying, maybe paying the 1.7 million for HDB resale flat. But definitely, if you look at the whole market performance, private market is actually quite resilient, but the HDB resale market is doing even better. So how? If you look at in terms of prices, okay, so this is one chart that we have drawn out the data. This is from data from HDB on HDB resale prices. You can see that even when I cropped this chart, right, it was quite difficult because it's almost off the chart. Okay, we have never seen this before, where it's such a steep increase in prices and it's within such a short period of time. And it looks like it's still going up when I check the transactions. And if you look at in terms of the transactions down here, number of properties or HDB resale flats that has been sold, you can see that although prices have reached a record high, the number of transactions is still going up. Okay? So to me, I think that this is definitely a concern. And in terms of most of the time when we talk about HDB flats, we don't look at by per square foot price. But if you look at by per square foot price, which is, we did one of this study with Straits Times, and it was published in the papers, it's quite surprising that a lot of these transactions was above $1,000 per square foot. You know, for some of us, we know $1,000 per square foot in the past, you can buy a condominium. But right now, if you talk about HDB flats, many of them have actually touched even $1,400 per square foot, which is even higher than some of the resale condominiums. And the other good news that we have also seen is that in terms of this, another paper that we've done recently, just last month, and it was published in Business Times, Zhao Bao, and some of the other papers, is that older HDB flats right now are in demand. In the past, many people were quite concerned about the depreciating lease of older flats. But if you look at here, the transactions, the number of older flat transactions have actually reached a record high in the first half of this year. Okay, and well, there could be many reasons. Like for example, this one, these are the number of transactions of older resale flats more than 40 years that has been sold. And you can see that in the first half of this year is a record high. Perhaps, maybe the newer resale prices have really reached a record, so people are buying this. Or right now, a lot of people are buying the bigger HDB resale flats. So this could also be one reason why older flats are now in demand. So in terms of transactions right now, if let's say for example you own an older flat, this is good news because 2 out of 10 properties, HDB resale transactions is actually an older flat. And with this, because of the high demand, in fact, prices of older flats have increased. Here are the older flat prices. It has actually increased faster than new flats at 8% compared to 5.2% for newer flats. So for HDB resale market, I think even when they have put in the new cooling measures, I think in terms of price projection, we are still quite positive. That means we are looking at perhaps even double what we have seen in 2023. And in terms of transactions, very hot, definitely more than what we have seen last year. And next, because of the HDB resale flats that has been sold at such good or high prices, we are looking at a new group of buyers coming in, which is the rising affluence of some new buyers into the market. Like for example, these are the $1 million transactions that I mentioned just now. If you look at these $1 million transactions, in 2023, there were only 470 units. But if you look at the first half of this year, it's almost equal, okay? So we are now expecting this year to at least hit 800 units. And out of this number, let's say for example, you are not selling your HDB flats for more than $1 million, even if you were to sell for more than 700,000, you look at the number of transactions over the years, right now it's also at a record high. So these are, that means the number of HDB flats that has been sold for more than 700,000, and right now, for the first half of this year, is already almost equal to what has been sold last year. And because of that, many HDB dwellers are able to sell their flats for very high prices. Let's say, for example, 800,000, 900,000, $1 million. And that's the reason why when we look at the HDB upgraders, that means when they bought the private homes, many of them actually bought properties that are above $2 million. And if you look at the private properties that's been sold, that means bought by these HDB dwellers, down here, you can see that it's also at a record high here. Okay? So it means that out of, let's say for example, all the condominiums that's been sold above $2 million, 20% are actually HDB upgraders. Okay? So that's why right now you'll see that many HDB dwellers, they have been selling their HDB flats and they are upgrading to either a resale condominium or new private property. And this is again another study that we've done recently with Expo, and they wanted to find out like, why is it that so many HDB upgraders, they want to upgrade to a private property? And this study, we got the data from Department of Statistics, and we found that actually a lot of young people, residents, that means Singaporeans below 35 years old, they are staying in condominiums. That means a high number. Let's say for example, like there's a record number of people. They are very fortunate young people, right? They are actually staying in condominiums. So after staying in condominiums, after a while they say, okay, I must upgrade to a condo eventually in future. Okay? And this is the last part where we talk about, so where are they buying right now? We are also looking at a new trend of people. They are not just buying condominiums, but there are many other asset classes that they are discovering right now. Like for example, landed properties. Definitely, this is still a very hot market that people are still pursuing because of the freehold status. Another area, we have also done a number of studies with this. If you were able to buy an EC, you almost hit the jackpot, okay? Because we have seen many people, they are made instantly after the MOP, they can sell their ECs for a profit of at least 300,000, and many have made more than $500,000 by selling their ECs. And the other area that we have also seen from last year, shop houses, very popular in Singapore, where many people right now, because they don't want to be affected by ABSD, they will also look at buying shop houses. The other area is industrial sector. You can see that industrial sector here, there is a big spike in terms of transactions in the second quarter of this year. Okay? And one more, they are also looking at overseas properties. And that's why we are also showcasing many of these overseas properties. And definitely Japan is one of a very popular area. In fact, Singapore is Japan's top property investor in 2023. So as Justin has mentioned, we have our partner with us who is the #1 agency in Japan. They have many properties to look at. And one of the reasons could also be because of our strong currency. Okay? And of course, the other areas that they are looking at will be like Australia, Malaysia, UK, and like for example, this one, the new rails, I think the station, and then I think Johor is also one very popular area as well for investment by Singaporeans. So in general, what I've touched on, these are the upcoming trends that we can expect. Like for example, prices will likely continue to hold stable. That means they will stabilize, and then maybe there could be a bit of an upward trend in certain market segments, but we are not expecting a very major price growth. That means this could potentially be a good area to go in. Let's say, for example, if you look at HDB resale prices are still going up, and right now, private home prices are stabilizing. So this is actually the window opportunity to go into the market. And another one, who are buying? Definitely the 80% of Singaporeans. Many people will have the, I would say, the cash to go in, because right now, just now you have already seen, not only $1 million transactions, 700,000 and above transactions have been escalating. And in terms of the other asset classes to explore, you have shop houses, industrial properties, overseas properties, landed properties that you can look at, right? So that's all for my section. So right now I will pass the time.
All right, ladies and gentlemen, once again, a round of applause, please. Thank you, Ms. Christine Zan.